Hey guys, it's Shannon Williams, your favorite tax strategist and your favorite realtor. Here in a couple of minutes, you are going to be listening or watching a video that I put together so that you can make some of these things that you're buying during the holiday season an actual tax write-off. But before you watch the video, I want to give you a couple of pointers that are super important. Number one, make sure you watch this full video, okay? This video is going to be jam-packed with information that you're going to want to need to listen to and soak in. So it's not going to be a good thing if you only watch the beginning or only watch the end. There's going to be something that you miss or do not hear that's going to be critical to how you run this play. So if you are in a position where you're not sure if you're going to be able to watch the whole thing, I encourage you to save it to watch for later where you are in a position to where you can watch the full thing. Number two, I am not a tax attorney and I am not a CPA yet. Please understand that these videos that I do for you guys are only designed to educate you. They are not going to make you a tax expert. They are not to say, hey, my word is law. It's for none of that. It's more so to educate you so you can start having these conversations with whoever is doing your taxes. Start asking certain questions. So number one, you have a clear understanding as to what's going on with your taxes. And number two, you are happier with your tax results because you are opening up bigger conversations with your tax professional, whether that's a CPA, a tax attorney, whomever. This is designed to make taxes a little bit more digestible so that you can have these conversations. Number three, your intentions are super important when it comes to filing your taxes or tax code, okay? Your intentions are super important. So it is not our intention to teach you how to scam the IRS or the government. It is our intention to educate you. There is nothing wrong with you taking advantage of tax avoidance, which is very different from tax evasion, okay? Tax avoidance is more so understanding the tax code and making sure you are living your life and living a certain lifestyle to where the tax code is working for you. There's nothing wrong with that whatsoever, and that is what these videos are designed to do. There is a very thin line between trying to scam the government versus being very educated and being smart about how, when, and what you are documenting when you are making certain purchases. Now, when you watch this video, I want you to understand that you are going to hear the word gift several times. What we need you to do is shift your thinking from thinking, hey, I'm going out to buy a gift, to how you can make this a tax write-off. If your intention is to buy someone a gift is a gift. There's no way around that, okay? If you are purchasing gifts, the max that you can actually write off as a deduction is going to be $25. It makes no difference if you spent $250,000 on gifts throughout the year. You can only write off $25. However, this video is designed to change your mindset, change your intentions on how you are buying things, what your intentions are, and being smart and strategic about what you are purchasing and when you are purchasing it. I'll give you a quick example and then we'll get into the video. Now, I'm going to give you 3 scenarios that are going to be designed to helping you understand the video that you're about to watch, making the intentions crystal clear. In these scenarios, I'm going to use my nephew as the main character in each of the scenarios so that you can see the difference and why the outcome is the outcome. The first scenario is just me simply as an aunt buying my nephew a $500 gift card, Visa gift card. In this scenario, there was no intention of a business transaction. My nephew doesn't work for me. It is just the relationship of an aunt to a nephew purchasing a gift, whether that is during the holidays, a birthday, or just because I am simply purchasing him a gift. There is no tax benefit in that whatsoever. And that's not even $25. There's no tax benefit in it whatsoever. Now, in scenario 2, I am a business owner, and let's say my nephew does work for the company. However, during the holiday, I just wanted to give him a gift card, okay? Maybe I'm giving all of my employees gift cards of $500 each. In that scenario, there is a tax benefit. However, that tax benefit is simply a gift. It is only designed to be a gift. So no matter how many $500 gift cards I have given, let's say I have 3 employees and I've given them each 500, realistically that's $1,500. However, because it is a gift, I am only able to deduct $25, not $25 per person, just $25. That is it. Now, in scenario 3, now here's your bread and butter, guys, okay? This is where you're going to see the shift of intention. You're going to see the shift of mindset, the shift of what you're documenting, and this is where you're going to get the real tax benefit. Okay, now we're still using my nephew as the main person. He is still my employee. Let's say that he runs my social media department or my marketing department. Well, instead of giving him this $500 gift card with no intention of it being for business behind that, let's say that we really need some drones for that department, okay? Let's say that we really need some new cameras for that department. Well, what I'm going to do is, because he is the head of my marketing team, is I'm going to go ahead and purchase those things. Now, this is not just a gift. Now, this is you purchasing something for the business that is essential to make the company more money. You have to do marketing. It just so happens that my nephew is the head of marketing. It just so happens that he received the drone the day before Christmas, or maybe it's not Christmas, maybe it's not even a holiday, okay? That part doesn't matter. It is the intention of why you are purchasing this. And so now I'm going to document on the back of the receipt that I paid $1,200 for new camera, a new drone, whatever it is that I'm purchasing, and why it was. Now I'm going to go ahead and document on the back of that receipt that yes, I purchased this drone on December 23rd. And yes, I purchased this camera on Black Friday. However, this is the reason why it was needed, right? So any expense that you write off for your business, it has to be in the pursuit of making money. The intention has to be, hey, I purchased this in order to make more money. There is no argument that you have to do marketing, okay? The IRS can't say, hey, that's not a write-off because your nephew is the head of your marketing team. No, that has nothing to do with it. The IRS can't say, hey, your nephew is really into, marketing or media, cameras and things of that nature, so this is not a write-off. No, the fact of the matter is he is the head of my marketing team. He does, and it's clearly documented that he does run that department. He does do all of my social media, all of my videography, all of my content, all of my postings. He handles that. So when he happens to receive this drone, has nothing to do with it being a tax write-off. Now, I'm going to give you one more example just to drive this point home before you actually watch this video. Okay, now I have an aunt that is the head of my events department. Now, some of you might be thinking, well, why would you need an events department? Well, you do, okay? Even with the tax office, even with me doing real estate, I have client appreciation days. I have team building events, right? So all of these are events that I just don't have the time to plan myself. So instead of me paying some random person, I choose to pay my aunt to do that. Now, because she is the head of my events department, where we throw events to keep our clients happy, to make sure our teams are working together cohesively, these are all things that make a big difference in the business that I'm running. So any event that we actually do, especially if it is to keep our clients happy, to retain the clients that we have, to bring in new clients, that's all in the pursuit of making money. If it is a team building event, that is to make sure that our team works well together. That is definitely in the pursuit of making money. So all of those things are a write-off. Now, if I choose to go ahead and purchase some things that we can use for our events, like a karaoke machine, or maybe even some bouncy houses, all of those, and if I choose to purchase those things on Black Friday because I want to save money, I am being a responsible business owner and I want to save money on those things that I'm purchasing. If my aunt happens to receive these things, whether it's a holiday or not, as long as it is being used in the business, that is a write-off. If I decide that I want to go ahead and purchase all of my employees Apple Watches because I need them to respond to emails on the spot, whether they're in the office or not. Maybe they have a remote position. I need them to be able to respond to my emails. I need them to be able to respond to client emails immediately. Okay, so whether or not they open that on Christmas Eve has nothing to do with it. Whether I purchase it on Black Friday has nothing to do with it. The fact that the intention is for them to have it for the purposes of making the business run smoother, for the purposes of having it for the business, that is not a gift. That is not me just giving them a gift. It doesn't matter that one of my employees is a family member. They are my employee, and I have given them something that is with the intention to make the business run smoother. It will be used in the business. Therefore, this is a write-off. Now, I want you to understand that if your family members or whoever it is not working in the business, there's no way that we are going to advise you to go ahead and write off just gifts that you're purchasing people or gifts, okay? What we are doing is saying, hey, be very intentional. Stop just spending money just to spend money without being intentional, without asking your CPA, hey, how can I purchase this? In what way can we make this a legitimate tax write-off? Have these conversations with whoever is doing your taxes so that you can get the best outcome, okay? Again, we are not telling you to go ahead and try to scam the government out of paying. If you should pay, you should pay. However, there are ways to have legitimate claims for write-offs. Especially if the intention is right, especially if the documentation is there, your proof is there, your receipts are there, then by all means, make sure that you are getting the most out of everything that you buy. If it should be a tax write-off, well then let it be a tax write-off, okay? That is all that we are trying to suggest to you. Now, hopefully you guys can watch this video and you come up with more questions that you can actually have with your CPA, tax attorney, whoever's doing your taxes, with whomever, okay? So enjoy, guys, and happy holidays to you all. Hi everyone, this is Shannon Williams of D2R Taxes, and I know that this is the season for gift giving and family and fun and holiday cheer, but at the same time, I want you to keep in mind that this is also the last quarter, the last ending days before you have to start doing your taxes. And so while I want you to do the gift giving and the happy cheer and everything else, I also want you to make sure that you have your taxes on top of your mind. And in this video, I'm going to give you some tips to where you do not have to choose one or the other. I am going to give you the tips so that you can purchase your gifts and have fun for the holiday, but at the same time, make sure that you are smart about what you're purchasing, that you're smart about your gift giving, and making sure that these are also tax deductions. So the first question you want to ask yourself is, who are you normally buying gifts for, right? Is it your mom? Is it your cousins, your family, your friends? And normally when you're buying gifts for those people, those are not tax deductions. That is just money going out of your pocket, and you will never see that money again. So you go out and you purchase your mom a new phone. As a consumer, you are just out $1,200, right? Those iPhones can be a lot of money. But if your mom is actually an administrative assistant or manager who happens to be your mom, that iPhone now becomes a full tax write-off. Let's take it a step further. So let's say you travel like me to your family's house for holidays, Thanksgiving and Christmas, right? That traveling can be very expensive. The gas, the flights, the rental cars, all of these things can add up, and you are just out of that money if you are just going for the holidays. However, if most of the people that will be there are actually on your board of advisors, now that whole trip is a write-off. Now, I am not suggesting by any means that you just say these things in order to get a write-off. But let's be clear, guys, we are at an age to where the people around us should be doing business with us, whether they are our friends or our family, especially your friends. If they're adding value, maybe they can add value to your business as well. And when you do that, you are strategically putting yourself in a position where all of these things that you're going to spend money on anyway, and that are just going to be money out of the window, now becomes full tax write-offs. So guys, in order to make sure that you're actually able to do these things, you have to make sure that you are having a business meeting with your board of advisors. Then this trip turns from simply going to gather with family and friends for your holiday season, which is not a tax deduction, to something that you're going to do anyway, but now with having the proper records and keeping the correct minutes. And those type of things will allow you to now turn this trip that you're gonna take anyway now into a tax deduction. So if you need assistance with making sure that your records are together, with making sure that you're able to execute on implementing this strategy, make sure you contact my office. This is Shannon Williams with D2R Taxes. You can DM the words tax strategy or tax write-off, and someone from our team will be happy to get with you and set up a consultation. You guys have a happy holiday, and remember, you can do both holidays and taxes. Bye, guys.